Multi-utility electric scooter maker River has announced a $40 million or about 335 crore rupees Series B funding round, which is led by Yamaha Motors with participation from existing investors. Now, this round takes a cumulative fundraise by River to about $68 million since its inception in early 2021. Now, River plans to use this capital to scale its distribution and service network across the country and invest more in R&D for its future lineup of products. So joining me now to talk about this latest funding and its plans to make a dent in this competitive two-wheeler EV market is Aravind Mani, the co-founder and CEO of River. Aravind, thanks very much for joining here. Welcome back to Startup Street. Start by giving us details of this $40 million funding round because, you've got Yamaha investing here. We want to understand, is this more of a strategic investment? Is it going to entail more involvement in terms of a partnership with River?
Thanks for having me to start with. And it's an important milestone for us. $40 million of Series B, especially led by Yamaha, is significant in terms of executing our plans for the next few years. Yamaha definitely has strategic intent with the company, even though we are yet to outline the final plans as to how the association will be between these two companies going forward. So today it is a pure play financial investment with a lot of potential for strategic association.
But give us some hint, Aravind. I mean, what do you plan to do with Yamaha?
Oh, there are multiple things that we can do with Yamaha, right? I mean, Yamaha has multiple plans for launching their own EV products in the market. River could be a strategic partner in helping them develop those products. Yamaha is also a great name in terms of a two-wheeler. It's an iconic name. Their manufacturing prowess is amazing. Their quality standards are amazing. And we have a lot of learnings that we get from Yamaha. So there are many strategic synergies that we can explore over the next couple of years.
Okay, so, back to that $40 million check that you've got from them and others. How do you plan to use this to scale your distribution, and what is this new product pipeline you're going to be working on?
Oh, I mean, our first store is open in Bangalore, in JP Nagar, and it was earlier this year. Yeah. We plan to open stores in over 100 cities over the next 2 years, and stores and service setups both. So we're very focused as a brand in service as well. So both stores and service centers will be open over the next 2 years in over 100 cities. That is the distribution plan. And when it comes to next product, it will still be in the two-wheeler space. We are very focused on a particular segment called the utility lifestyle. We want to stay within the purview of that when we do the next product. It will be launched in early 2026.
Okay, early 2026, your next SUV of EVs, as you call them. Of course, you have the likes of Ather also building something along those lines. But, tell us how the response to Indy has been. You just launched it in October. How many units have you sold so far? What are the monthly numbers you're clocking? And what's your plan to scale this sales figure?
So we are only selling in Bangalore today. We started selling in October. Over the last 3 months, we sold over 200 units. And this month, we'll be hitting a run rate of around 200 per month. And in March, we'll do 300 per month. And that is only Bangalore. We want to be in around 10 cities in the next 6 to 8 months. So reach a scale of around 2,000 units per month by end of the year. And when we close the financial year, we want to be at a run rate of around 3,500 units. That's March 25.
Well, that's a steep upward trajectory you're looking at. But
Yep.
Okay, but let me quickly get to the price point because, when we last spoke at the launch event, you'd priced it at 1.25 lakhs and then you hiked it later to 1.38 lakhs ex-showroom, which is more comparable perhaps to some of your rivals like the S1 Pro, Ola. But, we want to understand that the price increase dent the demand to any extent, especially given, bigger players like Ola were offering steep discounts through December and are continuing with it. Are there going to be further hikes as well because of the government scaling down the FAME subsidy?
Oh, yeah. I mean, the price increase, to answer your first part of your question, has not impacted the demand at all. In fact, we are we are behind demand in terms of behind supply in terms of our manufacturing to meet the demand that we are having. So the price increase that we did, which is nominal, around 13,000 rupees is the price increase that we did since launch, has not put a dent on the demand at all. We are seeing very strong demand in the market. On the other side, there will be further price increases in case the subsidy goes away further. I think it's a large industry problem, and we are not focused on increasing volumes by dropping prices or selling at loss at this stage. We are only focusing on providing good quality service to our customers today without worrying too much about the volume that we are going to crack. Because the volume that I told you right now is not significant, right? It's important that we create the distribution and the service network today. That is our core focus.
Aravind, you may not be worrying about the prices, but India surely is a price-conscious market for, value-hunting consumers. So tell us, what is your longer-term plan? Then we asked you this when you launched the Indy as well. What sort of market share do you think you'll be able to capture with, the number of EV players that are mushrooming by the day in India?
I don't think there are so many players mushrooming in India at this stage. If you just apply a simple filter of the capital raised or apply a filter of capital raised at around 15 million and above, or even are they doing product sales? There are many companies launching products without selling them. So if you apply these two filters, you will see that the number of EV players will be handful. You can count in your hands. Even the new startups who are actually selling will be handful. And price is definitely an important equation, but we do not believe that it's only price that decides the market share. So take River, for example, right? We are close to 3 years old now. We started in March 2021. We took a product to market, completely developed the product from scratch and took it to market in around 27 months. So by the time we are in March 2026, we will be 5 years old. The target that we have is to reach 100 cities and reach a scale of around 9,000 units per month.
Sure.
That is $200 million in turnover itself, which is a fundamentally strong business. There are listed companies in India that does less than $200 million in turnover. So we approach the problem from more fundamental angle. We approach the business from a more fundamental angle rather than burning investor money to gain market share. Yeah.
Sure, Aravind. Okay, Aravind, we take your point there. Thanks very much for your time. Always a pleasure speaking with you. Thank you for joining us here.
Bye.